The best real estate deal I ever made will shock you. Everyone knows me as a value investor, and everybody thinks that means I'm trying to get the absolute cheapest price on everything relative to the price that's directed. But in this situation, the best real estate deal I ever did, I actually paid above ask price, and I've been making over a 40% return on my money over the last 10 years. Let me show you how I did it and how you can do it too by understanding price versus value. Now, as I said, I'm known as a value investor, but people always think that means they're trying to buy bottom of the barrel. And there are some value investors out there who do that. But as my value investor, what I try to do is I look at price and I look at value. When value is above price, I'm interested. When value is below price, I'm not interested. This deal was in Columbus, Ohio. I owned a property just a quarter mile away that was much bigger, not as nice. And here was this property that came out about 100 units, and it had a lot of 2-bedroom townhomes. On my property, which wasn't as nice because it was on a main road, easy access, very busy, I was getting about $725 in rent for my 2-bedroom townhomes. This property, which was a little more set back on its own private land, covered in trees, had a pool, much nicer, their 2-bedroom townhomes were getting $540. So I remember looking at this deal going, wait a second, how is this even happening? They're a quarter mile away. And a quarter mile in a lot of markets, it can be a big difference. But in this part of town, it wasn't a big difference. So I'm looking at $540 versus $725. And I'm like, okay, there's a disconnect. Let me call. So we called the broker and they said, yeah, it's an out-of-town owner, lives in California, very wealthy, doesn't really pay attention, and has a third-party manager. So of course, I started to get excited. I sat there and said, ooh, third-party manager, out-of-town owner? Nothing could scream low rents more than that. So I made an offer on the property. They rejected it and they said, listen, you got to be at full ask price. And I was getting a little worried about it. I said, you know, what if they go shop me around? So I actually went above ask price. I went 2% above ask price. I sat there and said, here's my price. They accepted it. Now, of course, the negotiations for the contract began and we did the negotiations, but the owner, it kept getting hard to be on the owner. The owner was on a plane. And so clearly the owner was extremely wealthy because he was always flying somewhere exotic. And I was like, okay, that's fine. This is a great deal. We finally got in our contract. And at one point I said to him, listen, to the broker, tell the owner, let's just partner on this deal. I'll be the manager. I'll put half the money up. He puts half the money up. We'll do the deal together. The broker said, this guy wants something to do with the property. He's selling it for a loss. He just wants to move on. I said, listen, he can make some of his money back. No, thank you. I said, fine, let's go do this. Guys, when I say the first day, this is no exaggeration. The very first day we owned the property, we got $710 in rent, 30% higher than their current rents with zero improvements. But we went a step further. We renovated units and we got $850 in rent. So you might be wondering, Paul, if you got $725 on the worst property, why only $710 here? Well, that's a great question. I don't exactly remember why. But we got $710 very quickly. I wasn't active at the site at the time and my manager got that. Great, let's keep on rolling. Now guys, imagine you buy a property that you paid based on a $550 rent and you got $710 on the very first day. What it does, it sets a precedent for us. So now when a tenant comes in and says, hey, I want to renew, we want to sit there and get them out. How do we get them out? Might sound awful, but we sit there and say, hey, your new rent's $710. Well, I don't want to pay that. Great, then move out. And vast majority did. But the funny part was there's still about 20 or 25% who took that rent. Why? Because they realized it was still a good deal in the area. So we increased the value of the property by way more than 30 or 40% by getting that return, getting that extra rent. Why? Because the expenses are all the same. I've always said to people, when you get higher rents, you actually either get the same expenses or lower a lot of times. And the reason for that is simple. When you raise your rents, you'll attract better tenants who take better care of your property. And in return, that lowers your maintenance costs. So I'm looking at going, we're adding $160 per unit per month to the bottom line. That is massively increasing the value of the property. So what are the lessons to be learned from this? Well, I look at it going, guys, everyone thinks that rich people are sophisticated and smart. In fact, the government calls somebody who makes a lot of money and is worth a lot of money a sophisticated investor. That's not necessarily true. Here was a guy who was flying private jets around the world who owned this property and he was getting $540, $550 a month in rent. And on day one, I got $710. Also, people say, go trust a management company. They're the experts in the market. Really? Then why were they getting $540 or $550 per month in rent? All they had to do was go on the internet and see comps and see our property at a much higher rent. But they didn't do that. They were either scared or they didn't even do it and didn't even do their job. That's what I'm trying to change out there in the real estate world. I put a poll on Twitter where I asked everybody, would you rather have below market rents, at market rents, or above market rents? Guys, I do not buy a property unless I think I can be the highest rent on the street. That is my goal for every property. That's the goal I want you to have for any property you buy. Now, it doesn't mean just increase the rent. I got lucky here because of the situation. But now that property gets over $1,100 in rent because we upgraded. We put in great backsplash, new cabinets, new bathrooms, marble in some areas, above what the market needed. That's why we get above market rents. But everyone's so scared of higher rents. But guys, that's how you make a lot of money. Ferrari's not scared of higher prices. They want higher prices. Another thing I want you to learn is you've got to understand price versus value. Price is what you pay, value is what you get. That's so important to be a successful investor. You've got to understand that your goal is to buy when value is well above price. Now, in real estate, even buying when value and price are in line can work out very well if you have the right ability to go in there and renovate units. At that point, that's where you can drive value much higher than the price you paid. That's what I want to do with every single property. That's what I do with every single person who comes to me for help with real estate. We're not here just to do turnkey operations. Yes, you'll do fine doing turnkey, owning a property, managing it, moving on with it. What I want you to do is build immense value. Build tax-deferred value. Guys, you know what's crazy about that property? I would have paid 50% more than they were asking for that property. I still would have made over 20% returns. I took advantage of some guy's inability to operate a property and some management company's inability to operate the property. I remember they came to us and said, hey, would you like us to stay on as property managers? And I remember saying, absolutely not. And I told them, guys, your rents are way too low. Oh, we think we have some upside in our rent. No, you don't have some upside in your rent. You have massive upside in your rent. They didn't believe that. Day one proved that. Real estate is such a great way to build wealth. And the reason being is you don't have some ticker every single day telling you what your real estate is worth. It gives you the ability to sit there and manage a property and do it well, do upgrades here and there. I always tell people I'd love to be the guy who went out there and buys a 2 or 3 unit property, or even a single family home, does the bathroom and kitchen myself. If you're able to do that, you can make so much money on a long-term basis. Now everybody's talking about, you see on TikTok and Instagram, oh, I did this deal and no, it doesn't happen. I love when I see these shows about California flipping and they're like, yeah, I bought a house for $500,000, put $500,000 into it, sold it for $2 million. No, doesn't happen. Does not happen. Guys, remember, if that was happening all the time, the markets would compress that profit. And that's what I know to be happening today. Don't fall for those traps. I want to teach a way in which people understand that you're going to build wealth long-term with real estate. And if you want to generate cash flow, you can flip properties today. But I know somebody recently who bought a flip and they said that it was a slam dunk no-brainer and their profit was up 15%. I was like, how is that a slam dunk no-brainer? You're going to spend a year and a half of your life to make 15%. It's like 10% a year. That's not a good idea. Now, if they can flip it quickly in 6 months, yeah, more power to them. That can make, okay, that works out well, but they were going to take a long time to do this, so they want to do the work themselves, which I think is awesome. But at some point, you've got to be, and by the way, that 15% did not include the work they were doing. They were not paying them for their time. These are the pitfalls that I want to help people avoid. So guys, I am starting a small mastermind group to help people get into real estate. If you're interested in getting involved, email VIP@everythingmoney.com and say all in. And to see how well I can do for you, watch our next video, how to buy one great deal per year to $10 million in net worth. Thank you for your time.